The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour on the second day of June. My pleasure to be here. I'm busy drawing up the 10-minute chart with the Chapman Wave notations and Chapman Wave there are targets, etc. So the E-mini right now is at 2,094. It opens down. It went all the way down to 2086.75, above the low that was made on the yesterday, 20 to 10, which is 2083.25. Having a nice bounce, and I would have to say, let's see, by 110, there should be an attempt. If the E-mini can break above 2095, it's at 2094 right now, can close above that number, there's a good chance that by 10 minutes past 1, we'll have a left side, right side price time match to target the 2097.25 area that was made this morning at 10 to 7. Whoops, there we go. So we went bullish yesterday. We bought the low on the day in the Dow, one of the Dow vehicles. And we have almost only longs in our portfolio, but we do have one short, and that's still down quite a bit from where we shorted it a while back. All right, so let's get to the new nitty-gritty. Oh, and I meant to mention that support is really imperative to hold. It's at 2094.75 right now. The E-mini, the 10-minute, it needs to hold in the 2093.25 area. 2092 is really the 9-period exponential moving average support. It shouldn't actually get there in this move. Suddenly there should be a conviction that, hey, this market is just not wanting to go down. Let's get to the numbers. The E-mini right now down 275, and you've made a peak B in the daily chart. It could be an E/B. I just see absolutely no reason right now with the technical so strong in the daily and the weekly to even consider that it could be an E and that we're going to pull back sharply. I think we're going to take out, by Monday, we should take out the 2103.75 high of the 31st of May and extend that to leg C in the daily. But then that makes it a week in the weekly chart, leg B. And the 120-minute chart, you can see this arch formation is almost like a little double head and shoulders pattern at the bottom here. Let's just take this away. We'll move it down like this. I want to run the numbers with the charts, because tonight in my webinar, I'll talk a lot more about that. We'll be talking about all the political, just the smorgasbord of technicals. And how can I put this? It's really a potpourri of themes. It's like a Rubik's Cube that I'm trying to put together. You know, there's kids that do it in 6 seconds or something. I'm not going to be able to do it in 6 seconds, but I'm going to be discussing a great deal about what's happened and what I think is going to happen in the market. And we'll talk about it in terms that I hope will be easily understood as I show charts and pictures, etc. So that's tonight at right here. Let me show it because I'm liable to forget. Right here, go to the front page of TFNN, the consequences of a new market high. The full title is really, basically, I'm talking about what will happen if there is a new high. I'm expecting that there'll be a new high sooner rather than later. That's an all-time high. I'm also going to discuss in the monthly charts what the implications are. Can we go higher? Is there a chance that we would have a very sharp pullback when we make something like a double top? We've spent a year consolidating, just over a year. What happens when you do that? What happens when you break out? What about the politics of politics? What about the dollar? What about bonds, etc.? I'll just be going through everything, as well as the particulars. We've already started implementing trades that are part of this webinar. So you can always just join in right now. So if you want to start your trial subscription, because that's the only way you can come to the webinar, you need to be a subscriber to my opening call, but you get it for free for a month. this is just a great way to do it, and you can even start the trades. Hopefully they will pay for themselves. So let's get out of this, and we go straight to our charts here. We're looking at the Dow. The weekly chart has this incredible W formation. It has not pulled back sharp enough to say that it's been negated. It will do that if we break 17,300, close below that. But at this particular point, a move into the 18,000s will be really positive, especially if it can happen by Monday. And look at that monthly chart sitting there, quite pretty. So the Dow is down 18 now after being down almost 100 points at 17,770. Oh, with my subscription, you get my newsletter every single day. And let me just show you something here, because what I do is, if I can just get to it, I just, folks, if you don't mind, I just need to go through these things because it's part of what's going to happen tonight. It's just part of what we do. So this is my opening call. I first discuss the Dow chart that goes right off early in the morning, 6:30, 7 o'clock. By then it's out. That's the first one. It's the Dow Daily. I discuss these arrows. I discuss what's happened, what's different about these channels, why yesterday's action changed completely my outlook of 3 consecutive declines after peak B minus. This, in case, would have been a C. So far, this is pretty good action. I give parameters what to look for, etc. In this particular chart, the second chart I send out is usually you just refresh. You put in your password, and then you just keep refreshing. You just click refresh, and up comes the next chart. Very soon after that comes the overview. 120-minute Dow chart over there, 120-minute VIX chart over here. This is the Chapman wave trend gauge. It's actually Richard Arm's short-term trading index. I use it as the Chapman wave trend gauge. Never spoken to him, actually. I wonder. I use it completely differently to the way he uses it. I use numbers. Yesterday, we had a very high reading which said, regardless of where the market is at the close or even overnight futures, there should be, because it's got a 98% accuracy record. If whatever the futures are doing, the Dow should have a sudden, what I call a rug pull early in the morning, and it did that, and now it's trying to come back. And here's the Dow daily and the S&P daily at peak C, if there's no new recovery high today. So that's that. And then I give all my charts. I show the charts of what we're looking at here. I also give you the E-mini, the daily, weekly, 120-minute chart of the E-mini, what we're looking for and why, and I give you the parameters. So it's a very comprehensive, and then all the charts plus my Traders Corner right over there in this little corner, you can't actually see it, is the Traders Corner. Today I had 19 or 20 bullet points. Some of them are just to say, like the QQ's parameter, the QQQ, that is the TLT parameter. I might not have trades, but I still put it in. GE, we don't own GE, but I put it in as a harbinger of what to look for, etc. So here we go. S&P, SPX.X is trading down 364 today. It's a little bit weaker than the Dow. Yesterday it was better. Oh my goodness, that's the break. So we're going to be looking at, so the S&P is down 3.5, the comp index is down just 3, gold is down, dollar is unchanged, crude oil was down earlier on, I think it is, and bonds are up sharply. I'll be back and we'll talk about that in a little bit more detail.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, a real good question. Got a couple of questions. Then what about Netflix? What I said was Netflix looks like it's being dragged up rather than leading. It was a leader, but it should rally if the market rallies. The way I'm looking at it at 101.43, it has 99 to 98 support, very strong support. But if it's able even to get to the 102.50s, there's a real good chance to hit the 104 to 105 area. And that would be, as I say, I don't think it's leading. I think it's being dragged up more than anything else. Next question was, Z in the Den spoke about soy. Look at this chart of soy. It's recycled. Either way I count it, this is going to be leg C in the daily, leg D in the weekly, brand new, huge leg B in the monthly. This is the continuous contract. Corn, a continuous contract is an E, could be a recycle, so it could be a D instead of an E, but it's a daily is still very strong, a little toppy, but the weekly chart is great and the monthly chart is starting to improve. That is really important. If I look at gold is still in this consolidation phase. We've been long the dollar. We remain long the dollar because I think that gold is at a spectacular move and it just needs to consolidate these big gains. In fact, it's been in a big consolidation phase since I would say made leg D at 3 on the 11th of March, the week of the 11th of March at 1292. Just a huge consolidation, slightly higher to 13. This is the continuous contract to 1308. And it's very close to key support. 1198 is the 200 period moving average. I think around there it should start to try to find a base. And that's just the dollar, which, as I said, we've been long, is holding very well. It doesn't look great, but it is doing well. And technically, it still looks like it could go a little higher. So while gold is still consolidating, the dollar could move to the I think that the 96 is going to be a really strong resistance. We'll see. Question about the EUR-USD. I think that's what it was. EUR-USD. Where did it disappear to? No, USD-JPY. Yeah, so euro-dollar currency pair is kind of acting like gold trying to rally, but I think it needs more time. And USD-JPY is the dollar-Japanese yen currency pair, made a peak D. And in fact, I do have to put in a down arrow here. And I think it's going to consolidate a little longer. And the weekly chart is just making an arch formation. Monthly chart still doesn't really look very good. So at 108.7, I think that USD JPY can pull back. I think it's going to test the 108 to the very high 107s at within the next week and a half. Next question was the Nikkei Dow. Trading right now, it went to peak A, B, C, D. Did I finish that, did I? So this is a B right here. See, what do you look for in the Chapman wave methodology? I'll be talking about that tonight. You look for higher highs, and that was there. And that has to be here as a plus. Yeah, so I think that by the end of the day, I'm probably going to put a down arrow here. Nikkei is digesting these gains. I think it's just in a trading range. The futures down 340 at 16,525. My thinking here is that 16,700s will be the resistance that it needs to break. If it breaks that, that's going to be positive. And on the downside, 16,300 better hold. Otherwise, it's going to go lower to test the 16,063 level, the 200 period exponential moving average in the weekly. Let me just show you something here very interesting. The TLT, I never expected that it would do that after going sideways, but I did say it's in the trading range. Anything can happen, and that if it's able to break above the high of the 13th, week of the 13th of May, of 132.32, then you could finally see it climbing towards 135.26 to start leg D in the weekly chart and leg C in the monthly chart, which is very positive. And that says that the Fed is not going to do anything just yet. Of course, they always do these things. They do come as a surprise every once in a while. So all I can say at this point, it looks like lower rates, but we've got to be prepared that the Fed could surprise us at any moment. I wanted to also look at crude oil. Remember, I said last that crude oil had kind of met its target areas, that I think it was now in a trading range. It's down 26 cents at 48.75. I'm not sure what all the discussions are going on and what they're going to do. All I can say is from the chart pattern, the weekly is still very strong in leg C. It hasn't made a peak C yet. It needs to go above the continuous contract. It needs to go above 50.21, and that will extend leg C. Either way, it's the monthly chart that's going to be the tell. And right now it's saying, hey, this is just a bounce, but a fabulous move in the daily and a very good move in the weekly on a percentage basis. So as I said, I think it's just trapped in a range. I think crude oil is just stuck for the moment. Now let's do, I was asked about the Nikkei. Oh, I was asked about, this is a good one. XOM, trading right now at 87.81. I'd already put this peak F. I did it a little premature because 90.40 wasn't the high. It went to a G, 90.46. So that was a little premature, and then I never looked at it again. I thought I'd look at it this weekend and never got a chance, and then forgot. So this is leg D in the weekly chart, leg G with a down arrow in the daily, and that's suggesting that Exxon has made its move in the daily. The weekly will be the tell, because if there's a close at 87.75 right now, if there's a close under 85.80, closes under the 200 period moving average, not good. So it might be like oil. It's stuck in a range with 89.50 as a resistance and 87 to maybe even 86.80 as a downside. But right now it looks weak, and I think that's a bit of a hindrance for the Dow at this particular point, because some of the Dow stocks are actually looking quite good. Actually, a lot of them are looking very good, but just I'm talking about today. So yeah, a little arch formation forming in CVX Chevron. So yeah, I wouldn't expect anything right now, but as a dividend stock, it still works. And the XOI, dollar XOI, oh, it's the same thing. Why is this not notated? I don't know what I'm doing here with these charts. A, B, C, leg C, peak C in the weekly, A, B, C, D, E, and then a recycle A, B, C, D. Yeah, peak D is just, once again, oil, ARCA oil index is just not doing very much at all. So it's just in a trading range. Now, I needed to talk about one other thing I want you to get to. Oh, BlackRock, BLK. People often talk about BlackRock with a name like that. You think something spectacular is happening. Well, BlackRock Inc. Is trading at 350.40, down 6. The pattern that I'm looking at says consolidation. It's almost like the oil chart. And it says that between 363 and 353, That's the trading range I'd be looking at. If it closes under 353 by Tuesday of next week, that's a negative. But if it starts to move above 364, I have to consider that it's going to work its way in a very bumpy ride towards the recent high. And that recent high was at 369.33 on the 27th of April. And if it takes that out, that starts leg A, B, C, starts leg D in the weekly chart. So let me just do this real quickly. I don't have time right now to do the Chapman wave notation. I'm just going to do this, and I'm going to show that there is a range between, right there, green, make that one red, oh, don't rush, make haste, slowly is the expression. Yeah, there we are. That's about what I was talking about. Yep, I would say just stuck for the moment. Basil Chapman, Tiger Technicians Hour. I've got my webinar tonight. I'll discuss some of it as soon as we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, another question GT asks about the semiconductor index. This is extraordinary. I don't recall under these conditions, this kind of questionable market conditions, the semiconductor index suddenly taking off in just a rocket ship move. It doesn't look so big when you're looking at it in the context of all these different chart patterns. But let me tell you, from 50.88 to 56, what was the high yesterday? 57.22 in virtually a straight up move peak A and then a modest little peak B, each one just barely barely active. And then you've got leg C, maybe a peak C today. This is amazing. And it took out the 56.99 high of the 7th of December. This, I have to consider, if you're putting it into perspective, I have to consider this is a big positive. And I'll talk a lot more about it tonight. Most importantly, it's got great support at the 9-period moving average of 55.95 to 55.28 is another moving average support level. I'm not sure whether it's going to be a deep peak C or whether it's going to go to a D and then start a timeout, because it's got the Chapman wave squash. This particular way the MACD and stochastic are formed, and that says that you can go really quickly and very sharply to a peak C. But after that, you've got to be very careful, because there could be a stochastic that pulls back, and as the pull, stochastic is the torque. And look at that divergence between the stochastic rallying from early May to the low that was made later on in the SMH as a semiconductor index at 50.88 on the 12th of May. And now look, we've got a fabulous move up and just a tiny little give back today of 22 cents, almost reluctant to give it up. But very often what happens is you go sideways, and it takes a little time. It could take 3 to 5 sessions to make the D. I'm not sure it even got that. I think it might even make the D by tomorrow or Monday. But at this point, the Chapman wave squash technique suggests that there's a torque, explosive move to the upside, and then the MACD's fast moving average, the differential, 9-period differential, that green line, continues the momentum. That's the turbocharger. That's where the power of the initial takeoff makes it easier for you to move into the higher gears. That's basically what's happening, and then just maintain that momentum. However, this is leg C in the weekly chart, and it's leg C in the monthly chart, but very quick. A, B, slightly higher. I shouldn't say very short distance between the A that was made in October of last year at 56.36, the B that was made in December at 56.99, sharp pullback to the 200-period moving average near the 45 area, and then it spirals back up, and now it's just modestly high at 57.72. So there are a bunch of connotations, implications. When you make, in the Chapman wave, you make peaks that are not just close together, and that's one of the techniques that we look at. But in this case, they were too close together, and the one took time, took 4 or 5 months, so that doesn't count. What does count is that each nominal new high sees a big pullback. And now what we want to see is that this is not a peak that the entire month of June it goes higher, and even July it extends higher. And that would give you a left side, right side price time match. Well, this is the month, so I'm not sure it can do it yet. But so far, these SMHs are very strong. That was the question, and that's my answer, and I'm sticking with it. A couple of things I want you to do. In my webinar tonight, free to subscribers, and it will be archived. So if you aren't able to get to it, you'll be able to see it. This is not one of those that you have to rush, but by the weekend, you'll be able to take your time. But it'll be archived by tomorrow. Just look at it, go over it. I'm throwing out everything I can, what to look for and why. I'm throwing out. I'm gonna show you a 1929 chart with all these little points of interest. A point of interest being that you're getting right now in New York. If I can find the chart, I don't know if I'll find the chart. Doesn't matter. You're getting in New York something that's quite extraordinary. Huge project, and that project has to do with the Hudson Yards, and the Hudson Yards just. When I say massive, I'm talking about humongous change in that area that nothing's been done for decades, and now it's becoming one of the most sought after areas. Except that the payment area, there's debt because they all the figures that they use before they decided to go ahead with the project were based on income, and that income is not coming in. And that's going to be the big thing, the big tell. I'm looking at this and I'm saying these are the things we look for. Why? Because right here in July of 1929, I haven't got it printed on this particular chart, Rockefeller, Empire State Building, where the papers were signed that month, August of 1929, just days before the all-time high. opened in 1952 as the Empty State Building. No, it opened in 1931. The quickest building ever to be built, and that skyscraper in that particular time frame. And then it opened in 1952 was the first time they made money. That's what I wanted to say. When it opened, it was called the Empty State Building. Now we've got the same sort, and then Rockefeller Center, right there in the summer of 1929. So what did they say? This is the biggest project since the Rockefeller Center. Did they call it the Rockefeller Center? The Rockefeller Complex. The match between what's going on now in the late 1920s is uncanny. Boston Back Bay. What's the picture that they show? 1930. When was all the construction done? Well, 1928, because there was a huge fire in the Back Bay train station, so they had to redo it. That had nothing to do with the crash, but what was interesting, it became one of the biggest projects. Right? So we're looking at this. What's today? The current Boston Back Bay Station design. We're going to be looking at all of this. We're going to be looking at charts. We're going to be looking at politics. We're going to be looking at interest rates. We're going to be looking at patterns that like templates, like fractals, these little miniature, like a snowflake. When it gets expanded, it's still the same design. It's just bigger. So these are repetitive patterns. And I'm going to be also looking at, if I can get to it right now, what is it still possible that we have Elliott Wave 5 still to come, right? Remember the chart I showed a year ago? More than a year ago, it was in February or March, and I showed this, and I said, I'm anticipating we will get Elliott Wave 3, a sharp pullback for Wave 4, and the moment we take out the high that is made on that Wave 3, in this case, it'll be Dow 18,352, $1 above the May high of last year. The moment we take that out, we've started a whole new ball game, because this is active. Wave 5 in Elliott and Chapman wave buy mode in the monthly charts. Bam. Doesn't mean to say that you can't double top in a V-shaped pattern here and then come down very sharply before you extend higher. But it does say that in this particular, the coda phase that we've been talking about for over a year is unfolding as we speak. And does a coda? Codas usually end dramatically, like with Beethoven. Beethoven's going on, and then suddenly moves off into another key, and then finally goes, finished. Will that happen? And when will it happen? And what about the capitalist? What about capitalism under attack? I'll talk about that tonight. I'll be back. Dow's down 28, S&P's down 4.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So here's the 10-minute chart. We did do a test of the 9-period exponential moving average. Now we're trying to move up. 1 penny, one quarter above 2095.25 starts your leg C, and that this Chapman wave inside wedge trend line right there. I usually make it green. That would be your trajectory. That would be the guide wire that's going to take you towards the level right there. A failure would be this time. A failure would be under 2091, which is the that was the faster moving average. No, that was a 9. Okay, would be the 2092 level. So up there it is, leg C. Oh man, is this very nice, very nice. Okay, so now I've got to go to the next phase. And the next phase is, I had a question in the den. Jane asked Basil, if we start at wave 5 over the old high, how long do you think that leg will run? Good question. And my answer was, long enough to get the Newton Center tennis courts once again talking stocks instead of new hips and knees. Yeah. And usually that phase takes about 6 to 8, it could even be longer months. And if that's the case, the final phase, that phase that like in 2000 is really November, December of 1999, where you got the confirmation of the breakout in the monthly chart, which led you to the January, February, March, extraordinary 3 months. The only thing I can believe right now is that after a mega move like this, from the 6,500s or lower in the Dow to the 18,300s, it would be so unlikely that we just have a major decline without one of the sectors having some hysterical move. And we really haven't had anything at this particular time that we can talk hysterical. We've seen, certain sectors, the gold stocks at a massive move. Well, they're consolidating right now. So I just don't see, in other words, I don't hear any cocktail party talk. And that to me says, well, I don't go to cocktail parties, so I won't hear it. But I hear about cocktail party talk. I don't know. All I'm saying is that these are not the signs that I would be looking for anything other than just a normal breathing. You could even have 12% correction if you make a new all-time high and pull back. That's just nothing unusual there. I'm talking about a 50% decline. I don't see that. I just don't see it right now at all. All right, so let's get back to our story. So the SMHs, good sign. Now I wanted to do a couple of things. What have we got? We've got 2 segments left. And in the 2 segments left, if you don't mind, I want to run through a couple of things that I find that are really pertinent to what I want to be looking at and what I am going to be looking at and why. If you're looking at, let's just take the New York Stock Exchange, NYA.X. So has made a leg C, it's actually a peak C, and it's not a great daily chart pattern. It's not bad yet. It could still go high. It's making the U-shaped formation. This is not really a Chapman wave squash. would take you to C and then pulls back. It has some of the characteristics. It's more like the 89% stochastic is good and the MACD is good. So this is going to, I think this is one of those cases where it'll be dragged up rather than leading. That's really what I'm looking at. But what's most important about the New York Stock Exchange, if you look at the monthly chart, which is really not a pretty sight at all, if you're looking at it saying, well, after all this, the Dow is just 600 or so points away from its all-time high. But the 11,254 high that was peak D in the 2015 top back in, I think it was May of last year, having pulled back to 9,000, we're only at 10,444. We really should be at 10,800, maybe even touching 11,000, and we're not. So this is a laggard, and that says to me, I have to constantly keep in mind that if this is a brand new buy mode, it's not even a buy signal yet. It's just a really good bounce. I won't get that until the stochastic is rallying nicely even further from 58% higher. This is the monthly chart. But the MACD hasn't even, it's far away from crossing positive. It would take at least 300 points up. I'd say 250 to 300 points up to really get that MACD to cross positive. But wait a minute, if it does go to a leg B, even above the high of April, 10,593.21, if it goes to 0.22, 1 penny high, that starts leg B. And if we are looking at the potential for higher highs to come in 2016, that says that there's still room to go, remember, retracement failure mode, because it's under that major peak D. You can go gray A, gray B, you can even go gray C. You can even suddenly break out and have an alternate wave count if it's possible. That would say, no, you can't, because it went underneath that low of 9886. That would be very positive if it made an all-time high. So all I can say is that as it stands right now, the New York Stock Exchange is the laggard. I would like to see it. It doesn't have to lead. I'd just like to see it participating at the same level as the others. But look at the IWM. I love the IWM at this particular point. This is leg E/A. Yesterday's high of 115.95. This is IWM trading 115.86. The Russell 2000 iShares ETF. And today's high is exactly the same. So this is still leg E/A to the upside. I love what's going on here. Most importantly about this weekly chart is that this is what I like to see. A nice, a peak A that's just almost an embarrassing, that is, it went from 109.95 to 109.94, 1 penny lower. And yet when it took it out a following week, that started leg B. So that is a peak A. It means that it's already made 2 peaks, and this is leg C. But what's really interesting about that, it went from 93.64 all the way to 115.87, and that's really good. And in fact, it's gone from 107, let's call it 108, to 115.5 in one leg up. So far, I have to consider that's all very bullish, and it's telling me that there are areas within the small caps, the Russell 2000. There are areas that are participating beautifully in this particular move. Now, you'll hear talk, if I've heard it for 30 years or more, about the Dow Industrial. It's only 30 stocks, and it gets readjusted. And whenever something's failing, they change it with something else that's going to go up. You know what? They always do that. And whenever they do that, those particular stocks that they put in tank and crater the market. Look what happened with Intel. And then they come back. But the way I'm looking at the Dow, the makeup, I won't have time tonight to discuss it. But the way the Dow is made up right now is one of the best that I can recall since the 1980s. The balance, the financials, the number in the financials, the healthcare, UNH, high tech. I love the way it is. I consider it to be one of the very best indicators that we have right now. And that's why I think it will be the index rather than the NASDAQ in 2000, where I missed it completely. Had a top in the Dow, called it a serious top, had a top in the NASDAQ in March, said it was a major top. It would never make that high in my lifetime. Well, it hasn't yet, but I hope my lifetime lasts a lot longer, because look at this chart right here. So I'm hoping that in this particular instance where the NASDAQ usurped all the money that traditionally went to the Dow historically for 100 years or whatever it was, it didn't that time. I'm thinking this time it will go to the Dow. It will participate. And here's the NASDAQ, the NDX 100. 48.16, high in March of 2000, hasn't got there yet. 47.39 in December. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's only down 16, S&P's down 2.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So I've been talking about this for quite a few years now, that we will see throughout the world mega complexes, mega things. I'll be talking about that in great detail tonight. Look at this. Thanks to Fletch and the Den for pointing this out yesterday, and I picked up the chart from the Cape Town, South Africa. Cape Town's where I was born, a little suburb of Cape Town, right on the coast. And it's like on the Cape Peninsula, right, very tip of Africa. It's not actually the tip of Africa. It's the bottom of Africa goes a little bit lower, but we call it the tip, where the Indian Ocean meets the Atlantic Ocean. You can actually see the waves and change of color, and the water on one side is freezing, the water on the other side is warm. Anyway, Cape Town, South Africa, biggest, most expensive. This will be Africa's largest museum in over 100 years. This is by CNN. Cape Town is about to become home to one of the most influential art institutions in the world. The 100,000 square foot Zeitz Museum of Contemporary Art Africa will be the biggest museum to open on the continent for more than 100 years, clocking in at about $38 million. You know what that is in rand? that's like $1 billion. It just might shift the contemporary art world as we know it. My contention is that within 3 years, knowing what's going on with the government there, within 3 years, maybe 4 years, this will be an edifice like the remember the soccer stadium, that huge, beautiful stadium that was built just for the soccer, for the World Soccer, which I think now is used maybe 3 times a month or whatever. It's just now behemoth. So this will be, unfortunately, and there's always been, from the time I was a child, there's always been a really active jazz, art, contemporary art scene, although I'm sure in the decades I've been away, that it's still active. So this is a beautiful building. It's spectacular. I hope it lasts. Anyway, I'll be talking about that. Cape Town, South Africa. This is one of the world's biggest museums. That's what's happening in the world. This is something at this point is unstoppable until it reaches some kind of a climax. My suggestion is it's going to reach a climax, and we'll know it because it'll be in America. It won't be in other countries. Someone in America has announced an attempt to build the world's tallest. It might not be the tallest building because how much higher can you go than the Burj Dubai? And I don't think we can, but it'll be America's tallest building. So I was asked about General Motors. Ford looks a little bit better. Look at the monthly chart. Look at General Motors. I don't know what is going on. I have to tell you, I look around and I see the Buick ads are fair. I love the Buick ads. I love the Cadillac ads are finally really coming into their own. I don't know what's going on in this company. It should be, instead of at 30.17, it should be at 40.17 at least. Something is so bad there, and they should have fired that woman who's there. She was there with all the problems. How did they make her the president of General Motors, the chairman, whatever it is? They need an innovative thinker. They need someone who's going to look out of the box and is going to be able to do something that really makes a difference for profits, not just the stars, profits as well. Yeah, enough for that. 30.17, would I buy it? I have to tell you, everywhere I look, I'm seeing General Motors and Ford cars. Let me think about it. Tomorrow's Technical Friday. I'll see if I can come up with an answer. I will be doing Larry's show tomorrow. And tonight, don't forget, folks, for me, this is really one of the very important ones. We're getting closer and closer to what I call this climactic move. I don't know if it's going to happen, but I can just tell you this. Go to the front page of TFNN. Check it out. This is the consequences of a new market high. I'm discussing it in great detail. I've already got 45 charts. I'll have to cut back some. And I'm going through this with everything involved. Charts, the works. I'm really looking forward to it. In fact, I'm really looking forward to it. I'll see you tonight, I hope. Don't forget, sign up and you can be a subscriber for 30 days free. Perfect time for that. Have a wonderful day. I'll be back with Tom later on. And most importantly, stay tuned for your swimming lessons. And then you've got Steve Rhodes, you've got Dave White, you've got Tom, and you've got Andy at the close.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,